Hello everybody and welcome back to BA Studio TV, and today we have a very special guest. We have Jay Tolisano from Cross Country Mortgage here, and I'm really excited and thrilled that he is here in our studio, and it's the first time that he's joining us, and we have been working together in some capacity in the past. We're knowing each other for quite a long time now, and I'm really thrilled that you're here. Thank you so much for coming.
Well, thank you so much for having me. I really appreciate it and look forward to spending the time talking with you. And yes, I don't know how many years, but definitely 8 years, 10 years. It's been a while.
Yes, I think it's around 9 years, 8-9 years, yeah.
So it's been a pleasure knowing you. I look forward to continuing to work with you. And of course, being here today is great. So thank you. Yeah,
sure. So Jay, can you please tell us a little bit about yourself, where you're coming from?
Sure.
Would love to learn more about you.
Yeah, so been in the mortgage business now going on my 20th year. I've worked on the broker level, I've worked on the direct bank level, working inside of a bank, and currently I'm with what's called a correspondent lender or direct lender, where we direct lend our own funds. But I've been in the business for 20 years, grew up in New Haven County, actually in the town of Hamden, moved down to Fairfield right out of college. Was in pharmaceutical sales actually, and then kind of followed the family footsteps. My mother's been a realtor for many, many years, and so kind of got into the real estate side, but on the math side of it, because I like numbers, so it's kind of how I got into the mortgage business.
Oh, very, very cool.
Yeah.
So we all know that currently we have an all-time low with mortgage. And what advice or insights do you have for first-time home buyers or people who are thinking about refinancing?
Mortgage rates are absolutely as low as I've ever seen them, and I think low as anyone's ever seen them, right? And you're probably reading in the news and hearing on TV that rates are at historic lows. And this isn't the first time in my career we've set historic lows, but I just don't know that we'll go any further lower than this, right? But we're seeing rates, low 2% range on the 15-year fixed, up to the high 2% range on a 30-year fix. But if you can lock in and close with a rate with a 2, right, you're in a pretty good spot. So yes, refinancing is obviously very, very high levels right now due to the market and what's going on. People are converting sometimes from a 30-year down to a 15-year and not raising their payments that much, or they're just saving on the cash flow and going into a new 30-year. We also have customers that are converting from an adjustable rate mortgage to a fixed rate mortgage to lock in and just kind of set it. So yes, people are refinancing for a number of reasons, and there's very many of them that are, because a lot of them benefit. So we do a whole analysis for our clients. It's not just sending them an email with, hey, your rate is 2.75 and your payment is $2,000 a month. We really look at their current loan and then compare it to what a new option would look like, and we go through a really detailed analysis. Whereas some will just kind of shoot you an email and say, Barragate rate is this, payment's this, do you want to go forward? That's not us. We want to show them what they have left on their term and what they can possibly do. So that's refinancing. And of course, we're always willing to help people and educate them on the process and whether it makes sense or not. Purchase transactions are at also very high levels. Inventory is at very low levels, right? When the pandemic hit in March, I think a lot of people were scratching their head and saying, oh no, what's next, right? Well, for the mortgage business, what became next was levels of volume at all-time highs, not only because people were refinancing, but as you know, a lot of people are moving into Connecticut from New York and New Jersey, and we're seeing them every single day, trying to flee the city or what have you. First-time buyers, to your point. Now, the interesting thing about Fairfield County, as you know, a first-time home buyer could be $1 million or $2 million value, right? So we're seeing a lot of people coming out of the city from a $5,000 or $10,000 monthly rent and buying their quote-unquote first home, here in Connecticut. And, the biggest thing that I always strive to tell people is get started with your financing early. So in other words, get your financing in order, then go shop with a good realtor. It's not the opposite. Don't go show up at a home, find the house, and then come talk to us, because now you're playing catch up. So the biggest advice for first-time buyers, or any buyers really, is to get prepared and to get started.
Yeah, I think that is really important, especially in the current real estate market where houses are selling so quickly. If you don't have your finances in place ahead of time, then it becomes really difficult to catch that house that you really want, and that's your dream home, basically.
Yeah, when I started in the business, there was a time when people were writing offers on the hood of the car. And you always heard that, like, oh, we wrote this offer on the hood of the car. And I will tell you, that's come back to the market now, right? It's the urgency of needing to compete with the other 4 or 5 people that are looking at that home. And I think that's going to continue for some time, because not only will people continue to leave the city when their lease expires or what have you, but you had a lot of people in March and in April and May that went into rentals, that rented homes in Norwalk and Stamford and Darien and what have you. And once those leases come due, assuming they like living in Connecticut and they're enjoying it, they're probably going to convert to being a home buyer.
Right.
So I think we will have that continuation of those renters too, because not everyone fled and bought a home. Some fled and just rented.
Right. Well, I saw them also, like when they're coming here and renting, they say, okay, I want to first get to know the area, so I really know where I want to buy. We intend to buy, so we see that already. Like
in school systems.
And school systems better. Yeah. Yeah.
So there's many reasons, and I really think that we're going to see through the winter. Right. You talk about real estate in the winter in New England. Last winter was a pretty warm winter, but if we have these cold winters, we always talk about like, oh, what's going to happen to the real estate market?
Right.
I personally think that we're going to stay at a pretty steady pace rolling into the spring market, and then I personally think you're going to see a surge again in the spring, because again, that's when those leases are coming due or going to expire on those folks who moved out here. So I think you're going to see.
And they want to get ready for the next year's school.
Exactly. So to your point about what can first-time buyers do, those folks that rented starting in March or April of this past year should really start getting their finances in order come January.
Right. So with the COVID-19 and the whole situation, how did that impact you and your business?
So very good question, and I will tell you it's been somewhat of a roller coaster, although I feel like we're on cruise control to some extent now. In March, when everything kind of came to a screeching halt, things changed pretty dramatically. And there was obviously a bit of sensitivity in the market to what's going on and what's going to happen, and are funds going to be available for mortgages and for home buyers.
Right.
So one of the pieces of the mortgage market that really came to a screeching halt and only has slowly started to gain momentum again, and I think it will be a longer time before it opens up fully, is the non-QM side of things. Non-QM is non-qualified mortgage. So simply put, it's the mortgage that doesn't fit inside the pretty little box, right? And those mortgages are for folks that are self-employed, let's just say. Not every self-employed borrower, but some self-employed borrowers. Those came to a screeching halt because they're a little bit of a riskier loan. And they are now starting to come back, and we're starting to see signs of that market opening up. I think the biggest thing was, how do you evaluate someone who's self-employed, who now hasn't worked second half of March, all of April, and all of May, right? Some people came to actually a complete stop, right? How do you evaluate their finances? How do you evaluate their income? And there are ways to do that now. We're looking at their last few months and kind of comparing it to the previous year. You got to kind of take that pandemic portion out where they stopped working, and to some extent you have to omit it. It wasn't like they stopped working or they went on a big vacation and said, oh, we're not going to generate revenue for a few months. So the way underwriting has been looked at, and guidelines, especially for self-employed folks, has changed, although getting better again. I think confidence in the market, in the real estate market, and people getting back to work and the economy being open will continue to bring the mortgage market back to where it was. It's fantastic. People are refinancing, people are buying homes, but yes, some of it was impacted. But I will say largely everything is kind of back moving again to some extent. Maybe not on the expressway like some loans, but majority of lending is back to full speed or getting there.
Okay, that's great.
It's a very resilient market, as you know, right?
Yeah, great information. Is there anything else that you would like to share with us?
I mean, listen, the one thing that my team and we always kind of talk about is we're always here and accessible for questions, right? And I know you and I have talked many occasions on different things on your side of the business or mine, but we always want to be educating people. We always want to be here for people. And I always tell people, listen, if you're buying a loan or buying a home and taking a loan with another bank and you happen to not come across my path early enough, or we didn't work together for some reason, always reach out to us, because we like to be advisors. Yes, we provide mortgages. We make revenue when they close, but we don't mind guiding people if they're in a situation where we happen to not be part of the deal. So we look at ourselves as a resource And my website is your home loan resource for that reason, because we want to be accessible for people.
Yeah, what did strike me, I was at one point, you had a little get together with some realtors in your office, and you invited me to come to that event, and you had a presentation there. And what really did strike me is how creative, in so many situations, like realtors were sharing their stories, how creative you were with coming up with ways when it was really hard to get something through the traditional ways, how you and your company were able to really bring the possibilities to your clients, new possibilities, and looking at it from different angles than the traditional way. So that did really strike me. So.
Thank you. Yes, we like a challenge, and you have to ask questions. If you don't ask questions, you don't know the material.
Right.
We were talking to a woman last night who said, I don't think I can get a mortgage. We started digging, and she said, well, you're asking me a lot of questions. And I said, no, let's keep going.
Yeah.
And sure enough, we got to a point where I said, okay, bingo, now I can help. Now I know how I can help you.
Right.
And she was like, okay, wow, I didn't realize. But yeah, so you have to kind of dive deep. We do like to dive into a tough scenario and try to figure it out. And, just be an advisor. Be a mortgage advisor, not a rate provider. There's a lot of people out there that are just rate providers. We look at ourselves as mortgage advisors. So yeah, thank you. I appreciate it.
Well, would you please be so kind and share your information so people can contact you, your contact information?
Yeah, sure. So we are Cross Country Mortgage. We are on 46 Miller Street in Fairfield, right behind Colony Grill, so we get to smell that good pizza coming out every day.
You must be hungry all the time there.
Absolutely. Our web address is yourhomeloanresource.com, and of course I can be reached on my cell phone, 203-913-4832. Work for a fantastic company out of Ohio, servicing all 50 states, so we provide funding and lending in all 50 states. Yeah, awesome. So thank you so much for having me. Really, really appreciate it.
Well, thanks so much for coming.
Yes. Your studio is amazing. I never knew the how expansive it is, but congratulations on all your success, and thank you for having me.
Thanks so much, Jay.
Thank you.
Well, hope to have you sometime soon again. And thanks to our audience. Thank you very much. Please don't forget to subscribe, like, and share our YouTube channel. We'll look forward to seeing you soon again. Bye.